And let's go across to the story flashing on your screens at the moment. The SIT, that's the Special Investigative Team, has made a set of recommendations in a bid to try and stem the generation of black money. This team has suggested the market regulator, that's the SEBI, brought into the picture to curb the usage of P-notes, or participatory notes, to route black money. It has noticed that a lot of money, for example, is coming from the Cayman Islands, that information of the beneficial owner with SEBI should be in the form of an individual KYC or know your client. In no case should the KYC information end with the name of a company. If a company is holder of P-notes or the ODIs, SEBI should have information of its promoters as well as its directors. If companies and trusts represented by lawyers and accountants, then SEBI should have information on who the real owners are and who the effective control actually lies with. Like I told you, SIT has raised the red flag, especially on inflows coming in from the Cayman Islands. The SIT says major chunk of outstanding ODIs invested in India from Cayman Islands stands at a whopping 31.31%. This translates into roughly 85,000 crore rupees. The Cayman Islands, the SIT notes, had a population of 54,397 in 2010, quoting from Wikipedia. It does not seem conceivable that a jurisdiction with a population of less than 55,000 people could actually invest 85,000 crore rupees into one country. So like I said, the SIT feels SEBI needs to have an effective monitoring system on unusual rise of stock prices. The red flags should be built into the system so that we see red flag on trading volumes and entities that contribute to those kind of trading volumes, and also wants the financial background of such firms. Let's go across to Mukesh Butani of BMR joining us. We're going to go back to Mukesh Butani just a bit. We've lost their phone line, perils of live television. Goes on to say then, SEBI, that AF told you that it wants SEBI to have effective monitoring control whenever you see a huge spurt or fall in prices, or a red flag be raised when we see unusual trading volumes. Wants to know who those people are that are responsible for those kind of trades, and goes on to add, the SIT, that barring such entities from the securities market would not be of strong deterrence in itself. In case it is established that stock platforms have been used for taking such kind of benefits, prosecution should invariably launch under the relevant actions of the SEBI Act. Goes on to mention Section 12A, that should be read along with Section 24 of the SEBI Act. We're going to reach out to lawyers and to accountants to figure out what this Section 12A is. The Enforcement Directorate then, this is the next suggestion by the SIT, the Enforcement Directorate then should be informed and should take action under the PMLA for all of these offences. So as you can see, the SIT training its guns on the stock markets, wanting the SEBI perhaps to be more empowered, but more importantly wants red flags into the system. So when you see unusual trading volumes, if you see unusual price movement, wants the red flags to be raised. I'm going to quote you a little more from that press release that's been put out by the Finance Ministry. It is clear that obtaining information on beneficial ownership of P-notes is of crucial importance to prevent their misuse. To put all of this in perspective, we've now got renowned lawyer H.P. Ranina joining us. Thanks, Mr. Ranina, for joining us on CNBC-TV18. The SIT making recommendations to curb black money, this time training its guns on the stock markets, noticing that there's 85,000 crore rupees of inflow which has come into the Cayman Islands, saying that is impossible if you look at the population that resides in the Cayman Islands. I want to get your reaction on this. What do you make of the SIT noticing all of these unusual volumes in the stock markets?
Well, this has been going on for a long time, and I suppose SIT has finally been informed of what's happening. In fact, SEBI has to be complimented that they have been doing fairly good work in this regard, and they have been able to unearth a lot of the black unaccounted transactions which are taking place in the stock market. This is one of the major sources of converting the black money into white money. And this is where I think both SEBI and the Income Tax Department now have to work together to make sure that this evil of tax evasion and black money is eradicated. I think the SIT report is I think, the first signal which has been given to the government to wake up and to take note of all the things which are happening in the capital markets, which is giving a bad name to the Indian stock exchanges.
You know, some recommendations also coming out as far as participatory notes and P notes go. The last time round also, when we had seen the UPA government trying to take action on this front, we'd seen the markets react very, very badly towards that. So let me just tell you what the SIT has said. Besides raising the red flag as far as inflows from Cayman Islands go, which is around 85,000 crore rupees, the SIT says the information of a beneficial owner must be with SEBI and should be in the form of an individual KYC. In no case should the KYC information end with the name of a company. And if a company is actually the holder of the P note or the ODI, then SEBI should have information of its promoters as well as directors. And if companies and trusts represented by lawyers and accountants are in place, and SEBI should have the real information on who is the owner, who has the effective control. How is this going to go down with investors, with FIIs? What do you think is going to be the future of participatory notes?
Well, I think we have to look at the merits of the issue, not how it will affect the market. What is being said is that today participatory notes are being used for, converting black money into white. And these notes where the proper KYC norms, know your customer norms, are not being followed. Now, unless we know who the real parties are and who are the people who have put their money, who are the owners of the real shares and securities, I think this is what any type of stock exchange, a well-regulated stock exchange, a well-regulated capital market would insist upon. So I think these are steps in the right direction. And while initially it may have some adverse effect because people who have unaccounted money will want to pull out, and that may have an impact on the capital market and the stock market, I think in the long run we have to set things right, even if you have to bite the bullet.
Okay, so we must set things right. How can this be done? Mukesh Butani now joining us. Mukesh Butani, of course, with BMR. Mukesh, we've seen the previous government trying to clamp down, trying to, strengthen KYC notes when it comes to P notes. It didn't really happen the way the previous government had envisaged. This time round, you have the SIT raising the red flag, saying, how can 85,000 crore rupees come from Cayman Islands? Want SEBI to have proper KYC norms in place for BP notes. Want SEBI to know who the real owners are of shell companies, of P notes. What do you make of this development?
Well, I think, Nayantara, we have to view the development in the context of mandate that has been given to the SIT, which is to look into the larger menace of black money, and they have chosen, it seems, in this report that they have submitted, to look at the stock market transactions. Now, these are merely recommendations that are coming in. I have not read the SIT report, but I think we should be extremely watchful and cautious about it, because the markets are extremely sensitive to any move in so far as regulatory environment for foreign investors is concerned in general, and in particular for P note holders, because we have seen choppy markets and situations in the past when these recommendations have come in. Now, as far as SEBI is concerned, to me it seems, without having access to the SIT report, that they are recommending stringent KYC norms to be able to deal with the menace of black money. I would imagine that the SIT report would be viewed as recommendations, and thereafter the SEBI would, in consultation with RBI and the Ministry of Finance, deal with these situations to curb the menace of black money. But at this point in time, I would draw only that context and beyond anything else that would result in any form of nervousness in the market.
Okay, so you think markets should not show any knee-jerk reaction, should not react until you actually see some of this being translated into law. Mukesh, just hang on with us. We've also got Anand Tandon, an independent market expert, joining us. Thanks, Anand. The SIT making certain recommendations for curbing black money, training its gun on the stock exchanges for now, and saying it is necessary that there be proactive detection or creation of shell companies, that the SFIO needs to actively, regularly mine the MCA 21. Participatory notes are transferable in nature, and thus tracing the true beneficial owner becomes difficult. And here's the important one. SIT asking SEBI needs to examine if allowing transfer of P notes is in any way beneficial for easing foreign investment. Anand, you're a market expert. How do you react to this? Is it necessary or important, or how important is it to actually have transferability of P notes? If that were to go, what would it mean?
Well, if you have P notes, it is almost mandatory that it should be transferable. The purpose of having a P note is to make sure that an investor can come in and out without necessarily getting registered in India. The more fundamental question is, do you need to have that? Can you make the process simple enough so that investors don't need to have a means of getting in and out without using a intermediary platform like a P note? All said and done, the security that is offered in a P note is not very high because it is off the balance sheet of the broker or the company which is offering the P notes. So the bottom line is, I think if the regulation can be simplified and especially the tax laws can be clarified, maybe the need for P note will not be there. But making midway corrections quickly without letting the market adjust will obviously lead to high degree of volatility and uncertainty.
And if they're not given any choice, they can't get out of it. But how willing will market participants actually be willing to share who the real beneficial owners are of these P notes, or who the effective control actually lies with? Because that's what SIT wants.
Well, the question is where you're coming from. The regulatory requirement should be that you should know who is investing. If that is the position we want to take, then, whether or not the intermediaries like it or not, you have to do it. Forget that within India, for example, there is now the KYC norms are so stringent that it is almost impossible for you not to figure out who it is. Now, that does not mean that you still don't have bogus transactions or you don't have dummy companies. In fact, SEBI's investigation of late in terms of use of market to transfer capital gains, for example, shows you that people continue to use the markets for whatever purpose they would desire, legal or otherwise. But the fact is, you can't trace who the owner is, and the KYC norms are fairly straightforward and stringent and need to be followed. There is no particular reason why that cannot be extended to foreign investors as well. That will not prevent people from trying to hide their identity or from layering various companies and so on. But I guess you'll have to draw the line at some point saying that if you've got a company which is registered in some regulated market, then you don't go beyond that, because otherwise, it's a non-ending chase. So I think, you will get to a stage where it will be reasonably clear that you need a regulated entity to be investing. And in which case, if the regime in India is favorable enough, you may actually get away with doing away with this P note structure totally.
Okay, so that could be the ultimate goal. Please hang in there, Anand. I'm also going to go across to Hitesh Jain. He's a senior partner of LMT Legal. Thanks, Hitesh, for joining us here. I'm sure you've been hearing what the SIT has recommended, saying that SEBI must have proper KYC, more stringent KYC norms in place to know who the real beneficial owner is of a P note, that it should never be in the form of an individual, and if it is, then there should be proper information. How do you react to all of that? First of all, what do you think of our KYC norms when it comes to participatory notes?
Well, KYC norm is very important because as far as participatory note is concerned, it goes on the, one of the important features of the participatory note is the principle of anonymity. And it is like the entity that is investing in participatory note, it doesn't register with SEBI. And another thing you have to understand that the SIT is concerned, insofar as black money is concerned, they have to plug all the avenues of the black money. Now, participatory note was one of the most favorite instruments insofar as money laundering was concerned. And there has been a debate and the information also that is available about the funds being taken out of the country and then they were being bought back using PMs. So from overall perspective, and particularly with anonymity and with the entity that is not required to be registered with SEBI, that is the reason I think SIT wants the stringent KYC norm, which is in line with the global KYC norms that are being seen in countries like United Kingdom or United States, where stringent KYC norms operate.
Okay, that's a good point. Hitesh, hang in there. I'm going to go back to Mukesh Butani. Mukesh, you know what the SIT has also said is that the major chunk of outstanding ODIs invested in India from the Cayman Islands, it stands at 31.31% or 85,000 crore rupees. That's what it wants to perhaps curb. That's why it wants to have these stringent KYC norms in place. Hitesh was just talking about it. Can you tell us where does India stand with other markets when it comes to these KYC norms, when it comes to participatory notes, and do market regulators of other mature countries actually know who has the effective control, who is the actual beneficial owner? Okay, I think we've lost the connection with Mukesh. So let me ask you that, Hitesh, because you were talking about the United Kingdom, for example. So where does India stand when it comes to our KYC norms? We have 85,000 crore rupees of inflows that have come in from the Cayman Islands, which the SIT is talking about. How do the market regulators of mature markets actually have information? Do they have such stringent norms where they know who has the effective control, who the beneficial owners are?
In India, we have a very weak KYC norm. In fact, in United States and all, they realized the problem and the menace of money laundering, and they acted like well in advance. And for last 15 years, for the smallest financial transaction, they have the KYC norm. To the extent that even the clients with the law firms they are also required to go through the KYC norms. Now, we are talking about the participatory notes and all. So if you look at the mature jurisdictions or countries like United Kingdom, United States, Germany, they follow stringent KYC norms. And the reason for following the KYC norms is basically to ensure transparency and to track the people who are engaged in the transaction. So the most important aspect of the KYC is the transparency. And when you basically talk about money laundering, black money, and all these issues, the problem is about the transparency. And you are not, and then when you compare with the P notes, the feature, as I mentioned, where the entities are also not registered with the SEBI and all, it is very difficult to identify as to which are the entities or actual entities who are the parties to the transaction.
Okay, Hitesh, please hang in there. Let's go across to a former member of the SEBI, J.N. Gupta, former executive director of SEBI, as well as the founder and MD of Stakeholders Empowerment Services. Thanks, Mr. Gupta, for joining us here on CNBC-TV18. We're talking about the SIT's recommendations to the government as far as black money goes. What the SIT has said is SEBI needs to have effective monitoring system of unusual rise of stock prices. Red flags should be built upon trading volumes, entities which contribute to trading volumes, financial background of firms, etc. Goes on to say, barring such entities from the securities markets would not be of strong deterrence in itself. It is established that stock platforms have been misused for taking LTCG benefits. Prosecution should invariably be launched under relevant sections of the SEBI Act. Section 12A, read with Section 24 of the SEBI Act, are predicate offences. Enforcement Directorate should then be informed to take action under the PMLA. I want to get your reaction to all of this, Mr. Gupta. How feasible is all of this? Do you think that this is necessary, or is the SIT perhaps exaggerating the situation?
Okay, so I will go one by one. First of all, feasible, yes, anything is feasible if there is an intention to it. Now the question is that how much intention we have, or how strong intention we have to do it. Secondly, it is a known fact that the markets are many times misused, as you have seen recent order of SEBI, that people are misusing it for tax planning. Now, there is always the issue that how far you go and what is the cost-benefit analysis and what is the impact of this. Now, if it is in a very small percentage, say maybe out of the 100% turnover in the market, in 1% turnover is like this, then we should not try to destabilize the market, but still go after the people. But if you see the history, we have a habit of making one step forward and two steps backward. This P-note issue is not new. It has been there almost for a decade, if not a decade, but less than a decade, but it has been there for 7-8 years. and every time you make a committee or you come out with something, or because that something happened in the market and investigation happens, and you put a blame on the P-note and say we should do it. But then the other lobby comes and says that if you hand the P-note, it will affect the inflow of FDI and something and all that thing. Now the basic question is this, that if the money, as I understand, it has been reported about the Cayman Island, especially mentioned in their Cayman Island SIT.
Yes.
Now whose money is coming from Cayman Island? Is the Cayman Island people so rich that they have been able to invest about 1 lakh crore in Indian markets? Obviously not. And the other aspect is that any investment should have a face behind it, that is, a physical beneficial owner should be identified. And when money comes from all these places, we do not know who is the physical owner of the, or real owner of the thing. So in my opinion, all these measures are good, but it depends upon the intention. Secondly, I also agree that all these measures bring problem to the market. But in my opinion, any problem will be a short-term problem, not a long-term problem, because every genuine investor in the market looks for transparency, proper disclosures, and risk reduction in the market. See,
so you agree that we don't have proper disclosures in place, that we don't have stringent KYC norms?
See, to me, it is there, because as of now, we do not have a physical beneficial owner of each P-note. And if I understand, the SIT has also recommended that there should be restriction on transferability. Now that I slightly do not agree, because if you put restriction on the transferability, then the whole market will be killed. But transferability can be still maintained by making things transferable among the people whose KYC is done. See, ultimately, idea is that the person who is transacting in the market should be known. And that is, and I do not have any wrong opinion or disagreement with this.
And to be fair, the SIT, Mr. Gupta, has said that, it's for the SEBI to decide if P-notes should be transferable in nature or not, how that is going to impact foreign investment. So to be fair, SIT has not said ban the transfer of P-notes. It's left it to SEBI to decide that issue. Unfortunately, we are out of time, so we're going to have to stop this conversation here. We're going to get you back at 9 p.m. in India Business Hour. We haven't also taken a commercial break for a long time. We've been discussing the recommendations made by the SIT for SEBI, how to strengthen KYC norms, how to make it more stringent. We're going to take a short commercial break. We're going to be back with plenty of news and updates. Stay tuned.